I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up, Apple, Amazon, Tesla, Facebook. It has been a big week for tech results, and we will have the highlights and industry reaction. Plus, Facebook striking an upbeat tone after its earnings results. We'll speak to COO Sheryl Sandberg about how the company is trying to move past its scandals and controversies. And Intel names a permanent CEO after months of searching. Why the chipmaker hired from within, and will it be the right call in the long term? First, to our top story, Facebook goes on the offense. The social networking giant reported revenue that blew past analysts' expectations. If the recent deluge of scandals and bad press is hurting anything, it's not the numbers. But Facebook still has a tough road ahead to win back trust. I spoke with Facebook COO Sheryl Sandberg Wednesday after the company posted the results from their headquarters in Menlo Park, California. We began the conversation focusing on the company's performance in the last quarter.
Well, we had a strong quarter, and I think it was an end to a really important, challenging year for Facebook. The growth is across the board. If you look at it, we now have 2.7 billion people using at least one of our services every month, and that's Facebook, Instagram, WhatsApp, Messenger. And I think, really importantly, Facebook is growing. We have now 2.3 billion users on a monthly basis, with 66% coming back every day. And I think one of the questions people have about us right now is we're making such big investments in safety and security. We have so much work to do to protect people on our platform. Can we do that while growing our community and while building our business? And I think this quarter shows we can do both. Now, we still have a lot of hard work to do across the board, but I think we're making progress.
There was an incident in the last 24 hours whereby it was revealed that Facebook had a tool that was collecting data from users, including teenagers, in exchange for payment. Apple has shut down your internal apps, and our sources are telling us that employees are panicking. How are you triaging this?
So I want to be really clear what this was. This is an app called the Facebook Research app. Despite some of the early reports, there was nothing secret about it. It was completely opt-in. Participants knew they were in. Great majority of people were adults, not teens, and people were compensated for being part of market research.
But even Apple has punished you.
Well, we've taken it out of the App Store. They've took it down. It was violating their terms, and that's something we obviously never want to do. And we're working with them on the employee certificates. But I think it's been a pretty productive day at Facebook where people are continuing to do good work.
That said, for a lot of people, this is a sort of not again moment. And so what do you have to say in terms of why should people trust you? Why should people trust Facebook?
Well, again, I want to be clear what this is, because what matters is that people know how their information is being used. And in this particular case, the people using the research app in the study knew they were in it and knew how their information was being used. But you are right that it has been a challenging time for Facebook, and we need to earn back people's trust with the steps we take. I think one of the things you saw in our quarter is how much we're investing in safety and security. And you know this. If you want to look at what a company cares about, look where it spends its money. And our expenses are massively up. We've changed our profitability because we want to take the hard steps to protect people on the platform. And you see us doing that. You see what happens with elections, the U.S. midterms, and around the world, fake accounts, decreasing the distribution of fake news. These are hard and ongoing problems, but we are determined to do the hard work and keep doing it.
The FTC has been investigating Facebook's privacy practices, and we've reported they're preparing for a record fine. What are you preparing for?
Well, we're working closely with the FTC and regulators around the world. I think what we're preparing for is to continue to make the investments in safety and security. On our earnings call just an hour ago, Mark said it was the top priority for the company, and we're going to continue. We have a lot of work to do, but we are making really good progress in a lot of areas, and we're going to continue to work hard. We're also continuing to build great products. I think what this quarter shows is that people are continuing to use Facebook in our different products around the world. And we're also going to continue to make important investments. One of the things I'm proud of is we are making massive investments in CapEx and also in renewable energy. By next year, we will be 100% renewable in all of our operations, including all of our data centers. So we're going to continue to make investments across the board.
Now, more broadly, and CFO Dave Weiner said a few times that revenue growth is going to slow down. You've promised to make changes. You've promised to fix the problems that people perceive. You said you welcome regulation. How do you convince investors that Facebook will also continue to grow rapidly with all of that as well?
Well, our numbers are public, and we are still a very fast-growing company by any stretch. And we're going to continue to make the investments to prevent harm, to build great products people want to use, and invest in the future with things like VR and AR. And so our focus is continuing to do all of that. And I think people wonder if we can do it at once, all at once. And I think this quarter shows that we can and we will.
Mark said on the call that he wants to decentralize power, and we know that you're working on merging the back ends of Messenger, WhatsApp, and Instagram. There's a concern that that will violate privacy or that privacy will be compromised in that process. Why do that?
So we know what people want from messaging, and our focus is always what people want. They want messaging that's simple, reliable, and private and privacy safe. We are working on ways, as Mark has said, to make it easier to find your friends and family throughout the network. But in all of that, as we do it, we're going to make very, very careful decisions with people's privacy and communicate clearly. And these are very early conversations with a lot of hard work to do.
My conversation there with Facebook COO, Sheryl Sandberg. Well, Intel has officially named Bob Swan as its 7th CEO, filling the most prominent role in the semiconductor industry at a time when opponents are challenging the company's 30 years of market dominance. This ends a months-long search where Swan claimed several times that he didn't want the top job. Our Caroline Hyde caught up with Bloomberg Tech's Ian King about the decision Thursday.
When I spoke to him about this earlier, what he said, Caroline, was, well, I love my job and I just wanted to make Intel a better place, but the more that I did the job, the more that I sort of took over, talking to customers, dealing with those kind of interactions, the more I understood about how sort of pervasive we are in the industry, and the more that became an interesting thing. Then when the board finally says, will you do it? I couldn't refuse. That was his explanation.
But the market initially was a little bit mixed about this. The shares fell. They managed to retrace some of that loss. But why the disappointment? There was plenty of hope that maybe we'd get a slightly more, well, for want of a better word, female CEO at one point, but maybe a more external candidate.
No, you're exactly right. When Kruzanich was forced out, Swan's predecessor, people immediately thought that Bob Swan would be a good interim sort of candidate. But then as things dragged on, as Bob said more and more, don't really want to do this, people started to look in other directions and assumed that the board was doing so. Then when we go back after 7 months to the person we all thought who was going to get it, then it's a sense of, oh, really? What went wrong in the interim? What happened? And there was a little bit of disappointment.
A little bit of disappointment, and now the key focus for Bob Swan to prove himself is, of course, take on some of the competition. Now, thanks to you, we've got some great quotes coming from him, really discussing how he's going to be doubling down on services and customers. Take a listen.
We believe we need to continue to provide real differentiated service for our customers, and not just have great financial results, but to increase the wide gap between us and the competitors in which we compete with in the market. Secondly, to bring next node process technology to life by having 10 nanometer systems on shelf in the holiday season of 2019.
Ian, just how hard is the competitive landscape right now for Intel?
Yeah, that's a very good question, because to look at their numbers, you would think, what's the problem? But if you actually look at what's happening behind the scenes with the manufacturing technology, which is extremely important in the semiconductor industry and something that Intel's been leading for decades, it's not looking quite as good. Intel is years late on the latest manufacturing node, something which other companies appear to have got to first. So arguably, over the next sort of 12, 18 months or so, it's going to face more competition than it has done for a very long time.
Which companies are the ones to watch that are biting on Intel's heel when it comes to these new innovations that Intel's been slow to pick up on?
Right, I mean, the obvious candidate would be AMD. Under Lisa Su, AMD appears to have sort of resurrected its fortunes and become a credible supplier again. But really what's potentially more damaging for Intel are customers such as Amazon, AWS, the Microsoft. They're looking at their own chips. They're looking at their own designs for these data centers where Intel makes so much money. And that really has got to be a huge threat. And they're outsourcing their production, of course, to TSMC, which is arguably leading in terms of manufacturing right now.
That was Bloomberg's Ian King. Coming up, tech earnings season gets into full swing. We discuss customer demand at Amazon over the crucial holiday season. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. It's been a big week for tech results. Amazon reported fourth quarter results, giving insight into sales over the holiday period. Tom Forte, D.A. Davidson analyst, and Darren Baker, CEO of JumpShot, talked with Caroline Hyde Thursday to get their reaction.
I think Amazon's obviously shown great growth in the fourth quarter. As you mentioned, the advertising business is skyrocketing. We've seen the growth of clicks, sponsored clicks, grow from 3% in January of 2017 to 6% January this year to 10% now. And you could easily imagine that $3.5 billion a quarter business doubling to a $7 billion a year, $7 billion a quarter business. We've also seen really strong transaction volume. I mean, they are still the dominant e-commerce player in both the fourth quarter, and we expect that to continue into the first quarter of this year.
Tom, your perspective, you've got a buy rating. Do these sorts of numbers substantiate that?
The answer is absolutely. But I think the fourth quarter is a continuation of a trend from the second and third quarter, to the extent that you have to get used to the more profitable Amazon. And what's driving that profitability is not only advertising, but third-party unit sales, which was 52% versus 51%. So the items sold on Amazon by third parties utilizing its platform, which is very profitable. And also their cloud computing effort, where the revenue growth for AWS was very similar, the rate between the third and fourth quarter. So I do think you're seeing a more profitable, and the growth engine is at Amazon being not only cloud computing, but also advertising and third-party unit sales.
And Tom, to that end, they're more profitable and they've got plenty more cash. I'm looking at a chart showing the sheer cash hoard that this company currently has. Tom, where do you think they put this cash to work in the best way? Where do they double down on? Is it about the advertising area of growth? Is it more about AWS? Because they're clearly still outperforming in e-commerce.
So historically, when you think of Amazon, you think of investment spending. So as it pertains to using the cash, we 100% expect them to continue their high pace of investment spending. In addition to cloud computing, it looks like they may do more with physical stores. They've talked about expanding their Whole Foods physical store footprint. We still think, for example, that Amazon could do gas stations. What they intend to do with Whole Foods is expand their delivery network by having more physical Whole Foods stores. We think gas stations would actually do that to a greater degree. And then they continue to invest in proprietary content, which is another important area for Amazon. So expect more investments for Amazon kind of across the board in a lot of their growth drivers.
The interesting element here, Darren, is that perhaps we're seeing a plateauing of growth when it comes to Prime subscribers here in the United States. Does this worry you in any way? Do you think that it's more now the time to focus on international growth?
Yeah, I think that's a great point. I think Amazon has to focus on that international growth. They basically invented e-commerce in the U.S., and when they've grown internationally, they've had to go into markets with entrenched competitors. So I think they really do have to focus on international. But I would also say, I think another area where they need to focus on are a lot of their higher-end private label products. So in terms of how they invest their cash, they can go after higher-end markets like apparel, clothing, things like that, both internationally internationally and in the US.
But Darren, there's already plenty of competition out there. Could they just throw aside the far-fetches of this world? There have been clear competitors who've made it their business to dominate, certainly in the higher-end luxurious side of apparel. Can Amazon win there? Because really, as your jump shot shows, a lot of the spending that goes on in Amazon is a lot less than the competitors.
Yeah, we've seen numerous examples. I mean, there's examples like we saw spikes on Walmart.com in the holiday season where the average price of a product sold went from $39 to $53 while Amazon stayed relatively flat. But if you're talking about where to invest that cash and where their competitors are making investments, almost all of it is at that higher spend level. And so I think Amazon's naturally got to move in that direction because they pretty much have dominated the basic cheap goods market already.
I want to go to the other part of the business that drives growth, of course, which you've been talking about, Tom. We're talking e-commerce, but also AWS, Amazon Web Services. 46% growth is phenomenal that they can sustain this sort of growth. Are we expecting to see that continue? And really, how are they changing up the model? How are they seeing the competition when we have got also Microsoft making inroads? And there was much worry that maybe cloud spending was dialing back a little bit.
So I definitely think the story for Amazon as it pertains to cloud computing with their AWS effort is the pace of growth should decelerate. The question is how quickly as it becomes a bigger effort for the company as far as total revenue generated. The good news for Amazon and what really drove the share price over the last 12 months was that its fastest growing business was also its most profitable business as it pertains to cloud computing. The good news, I think, to your point, though, is that they've been able to sustain this elevated growth rate despite significant advancements from both Microsoft and Google. So I do think that cloud computing remains a very important effort for Amazon, a fast-growing, though at a slowly decelerating rate of pace, but also a huge profit driver as well.
Tom, it's only 12% or thereabout of its overall revenue. How big do you think AWS becomes compared to the rest of the business?
Sure. So I do think when you compare the relative growth rates, 10 years from now, it could be 25% of sales. And if you look at it on that basis, that's why we believe Amazon 10 years from now can have a consolidated margin in the 21% range. So we do think that you'll see more margin expansion at Amazon over the next 10 years, really driven by their cloud computing effort, as well as advertising and third-party unit sales also.
That was Tom Forte, D.A. Davidson analyst, and Darren Baker, CEO of JumpShot. Coming up, the U.S. ramps up its fight with Huawei just as China-U.S. trade talks resume in Washington. How does it impact prospects of a potential deal? And later, iPhone sales slow down at Apple with a massive revenue drop in China. But Tim Cook, still bullish on wearables and services, will bring you all the highlights from Apple's fourth quarter results. This is Bloomberg. The U.S. has hit China's largest tech company with a string of charges ranging from IP theft to fraud. The indictments against Huawei come just ahead of crucial new trade talks in Washington. Huawei reacted to the charges by stating the company denies that it or its subsidiary or affiliate have committed any of the asserted violations of U.S. law set forth in each of the indictments, is not aware of any wrongdoing by Ms. Meng, and believes the U.S. courts will ultimately reach the same conclusion. That's Meng Wanzhou, Huawei CFO. Now, Huawei and its U.S. affiliate are set to appear in federal court in Seattle on February 28th. To face charges, the company engaged in a scheme to steal trade secrets from T-Mobile. Our Bloomberg Tech global executive editor, Tom Giles, joined us Tuesday to discuss.
The timing is everything, right? And these charges have come down just as the trade negotiations heat up. There's two schools of thought. One of them is this gives U.S. leverage, right? It shows we're serious and it gives us some kind of a negotiating chip against China. There's another school of thought, and we spoke on Bloomberg TV yesterday to a former U.S. trade official who said this undermines the U.S. case. This has the potential to show China that we're not serious about either side, either the trade issue or the case against Huawei, because why would we use one as a bargaining chip against the other? So in some ways, it kind of undermines our case to show that, well, we're willing to make concessions on this side of things in in order to get what we want here. Well, then how serious were you about this side of things in the first place if you're really just going to use it as a negotiating chip? Again, it's a different school of thought. So it could go either way as far as, U.S.-China is concerned.
Now, the U.S. has formally requested for
extradition. That's right.
Extradition for Meng Wanzhou from Canada to the United States. What's the process there?
Yes, so now Canada has 30 days to assess whether to honor this request. It's a very interesting thing. It's a very interesting, political situation that Canada's left in, right? Canada's paying a high price to be the U.S. ally here. They've had Canadian nationals arrested in China, seemingly as a result of, kind of retribution for Canada's role here. So it's not working to Canada's advantage. And you've also got to take into consideration this question of countries around the world, including Canada, and the U.S., by the way, want to build out 5G networks. And the fact of the matter is, a lot of telecom companies say Huawei is selling good equipment at a low price. Why can't we buy it? And there's all this political pressure from the U.S. against using Huawei's equipment as a result of these tensions.
Tom, your team has so many stories out on like every single angle of this Huawei stories. The title of one of them is U.S. message to the world: don't trust China on 5G. How will others receive this message?
I mean, they've got a way, as I said, your desire to use Huawei's lower priced and arguably reliable equipment when it comes to 5G, and this assertion by the U.S. government that Huawei can create a backdoor to China, that this represents a potential security threat for your country, your sensitive trade secrets, possibly your national security. That's a trade-off that a country has to make. Do I want this equipment, or do I want the potential for a backdoor? Where we see the U.S. needing to be more forthcoming, possibly, is to show more of why Huawei is a threat. It's one thing, yes, they're stealing IP, allegedly. Yes, they're violating U.S. trade sanctions. But are they a real threat to national security in terms of creating a backdoor for China? Are they saying to China's government, come on in, listen to these conversations between, the U.S. and its allies? And that's an open question.
Still don't have any evidence of that. I want to tie this back to Apple earnings, because Huawei, of course, is one of the big competitors to Apple in China. They're not seeing their market share fall like Apple is in China specifically. And they're in an interesting and perhaps advantageous position, because Apple has to outsource its chips, Intel, Qualcomm, whereas Huawei makes its own. So that's another part of Huawei's business. How is Huawei's business going to fare amidst this onslaught to the 5G side?
Yeah, I mean, it is an important part of their business. We spent time with Huawei in its labs and in its factories in China, and the message that they're trying to send is that we're more than just about telecom equipment, telecom networking gear. We're moving into new areas. We're moving into places like the Internet of Things, AI. So they are definitely trying to send the signal to the world that we have other businesses that we can rely on. We also did this story about the fact that their chips are in a lot of security cameras around the world. They're everywhere. So there are other businesses. And they have, as you said, a mobile phone business that is doing very well in China despite the slowdown. The slowdown is real, and it's hurting many companies, not just Apple. Where Huawei has an advantage, though, is it prices its products at a lower price point, something Apple failed to do, and that really hurt Apple in the most recent quarter. And we'll see what Apple starts to do with its pricing to kind of get around that. Another advantage for Huawei in China is local companies, we've heard, are telling their employees, buy Huawei, buy local, don't buy the iPhone. Let's see if that really is starting to take a toll, and if the toll continues into 2019.
That was Bloomberg's Tom Giles. Coming up, we are more than the iPhone. That is Apple's message to investors. More on where Tim Cook is focusing growth efforts next. And Bloomberg Technology live streaming on Twitter. You can check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Welcome back to the Best of Bloomberg Technology. I'm Emily Chang. Apple posted its first earnings report since CEO Tim Cook informed investors that Apple was cutting its forecast. The company reported revenue that was slightly higher than expected at $84.3 billion. But the number we were all waiting for is China revenue, a steep drop-off in sales in Greater China. Apple brought in almost $5 billion less revenue in China in the holiday quarter than a year earlier. Wedbush Securities Managing Director Dan Ives and Horace Dediu, founder of the market intelligence site Asimco, joined us right after the earnings came out Tuesday.
We've seen a couple of macro indicators really collapsing in the last two months of the quarter, actually November, December. Consumption tax, VAT tax, all these were down dramatically. Let's not forget that Apple was up 16% into calendar Q3 last year. So we went from going up to down 17% or so year on year. So there was a dramatic collapse in China, and it's not just Apple feeling the brunt of it. What we're seeing potentially is a collapse in consumer confidence overall.
So, Dan, the question then is why? Is it just because of these taxes? Is it because of broader sentiment across the country? Does it have anything to do with the trade war? What is the root of this?
Yeah, I mean, look, we continue to think 80%, this is Apple, specific to a mispriced 10R phone that ultimately we believe should be 15 to 20% cheaper. I think a lot of that has been a mispriced phone in terms of also from a technology perspective. You look at the camera technology, Chinese consumers, which represent, in our opinion, based on our estimates, 20% of all of the upgrades for iPhones over the next 12 to 18 months. It's a key region. They basically looked at this phone and kind of walked away. And that's where you see with these numbers, look, we knew China was going to be weak, but really fell off a cliff. The positives, obviously.
So hang on, Dan. Yeah. You're saying that the vast majority of this $5 billion is simply due to the mispricing of the 10R? What about all the other phones?
Well, 10R is all focused on China. You take a step back. I mean, this is really was Cook and Apple's focus in China was 10R. And if you look at the pricing of the phone, combined, we continue to think 80% Apple specific, 20% macro, Huawei backlash, and just overall headwinds. But a lot of it is a mispriced phone given the technology. And this is a huge iPhone cycle given 20% of all overall iPhone upgrades are in China. That's the key. And that's why in this call coming up is going to be key to how this turns around, as well as on the pricing strategy, how Cook and Apple are looking at it.
We know that there are, Horace, competing smartphone makers, Huawei, Oppo, Vivo, Xiaomi, all who make cheaper smartphones, phones that are much cheaper than the iPhone. But what do you attribute this to?
First of all, just to address this last comment, the entire sector in China fell. The phone sector fell about the same rate that Apple did. We had also Samsung reporting huge losses there in market share. We do have some of the Chinese players rising in terms of market share, but the overall market is suffering. It's not just Apple.
So why are some rising but Apple not?
Well, Apple does have the premium segment, so the premium you would imagine would be suffering more. But again, the overall market fell. So I think Apple is more or less in the middle of an overall contraction in the market.
When you look at iPhone sales in other regions, we saw U.S. sales overall slightly up year over year. Sales in Europe slightly down. So, Dan, where is the growth going to come from if it's definitely not coming from China?
Yeah, I mean, look, China is the linchpin, but fundamentally, you don't need to see mega growth here. I mean, it's basically, you're looking for plus or minus 5% type of growth, give or take. And I think right now, if you look, you just want to see a stable install base where ultimately we believe 350 million iPhones are coming up for an upgrade over the next 12 to 18 months. The fear and what's weighed on the stock is the install base. If that ticks down, that's fundamental to the services story. So we believe you start to see a China rebound, but the only way you see that is if they do cut prices more with 10R. And that's going to be the focus in the call, because otherwise it would be a lost iPhone cycle till September. And that's the worry of the bears and the bulls. And that's kind of the debate here. Do they cut prices? And do they take the medicine from a pricing perspective?
The call is underway. Tim Cook has just started speaking. He's saying that the macroeconomic conditions were actually much worse than the company initially thought they would be. Horace, they didn't break out unit sales for the very first time, but they did give us revenue for each product category: $52 billion for the iPhone, $6.7 billion for the iPad, $7.3 billion for wearables, home, accessories, $10 billion for services, generally in line with the way that the pie normally looks. What do you think the significance is of these numbers not having those unit sales for the first time?
Well, first I want to address one thing. The installed base there was an update given during the investor letter, and it's up 100 million over the last time that they gave an update, which means it's a 1.4 billion installed base right now in terms of devices. 900
million of those are iPhones.
That's an estimate, yes. We do have, as you cited, some of those figures in terms of their breakdown by units or breakdown by revenue by category. We have the iPad up 17%. We have the Mac up 9%. We have wearables and other growing at 33%. Just the wearables segment up 50%, which was given earlier. So, in fact, excluding the iPhone, the business is growing at 19%, which is still a smaller portion than the iPhone, but that's growing very well. So I think that overall, I think this is a healthy ecosystem. This is a healthy number of users. This is a growing number of users, and we have a great services story on top of that.
So reports of Apple's demise are greatly exaggerated. Is that what you're saying?
They have been for many, many years, 10 years, as long as I've been following the company.
Dan, would you agree?
I'd actually disagree with that comment in the fact that, right now, if you look at this, the story has changed, and the focus is on the install base side. So when you look at services and what's going to happen on the install base going forward, it's key to what's going to happen in the next 12 to 18 months. And China's a linchpin there if those customers do not upgrade. So I do think, as someone that's been long-term bull and continues to be on Apple, they are entering a different type of white knuckle period than they have before. So I don't think you could compare the two, and I think that's why investor reaction has been I think so negative. I think what you want to see here going forward is that the pricing hubris they're going to lose in China, and fundamentally the services business you'll feel more and more comfortable with. That's why what I think the biggest number here, the thing that all investors are focused on, it's the services gross margin above 60%. That's the line in the sand. That, in our opinion, why the stock's up. That's the first time they're breaking that out. That's key to the sum of the parts valuation for the services business.
Horace.
Margins are up on services. So during the year-ago quarter, when we had a greater story, a better story for Apple, they were 58%. Now we're 64%. The story on margins is not a bad one at all, and I think we're going to see increase there as well going forward. To me, the key question on installed base is that in order for that to decline, we would have to have people switching out of Apple product. We're not seeing that. If deferrals are happening, that means they're staying still within the audience of Apple. So I think that's yes, we should keep an eye on it, but I'm not sure that loyalty is going in any other direction than up.
That was Wedbush's Dan Ives and Asimco's Horace Dadu. And Roger Lynch, CEO of Pandora, will be stepping down from his role and exiting the company after shareholders approved the deal for SiriusXM to acquire the music streaming site. Other Pandora executives, including the general counsel and CFO, will also exit the company. SiriusXM CEO Jim Meyer will oversee the newly combined company. Coming up, Tesla's fourth quarter results are in, and it's a miss for earnings. Just how did the car maker fare overall? We'll discuss. Plus, Logitech reported strong third quarter results. What to expect from the company this year as it takes on gaming. This is Bloomberg. Also came out with fourth quarter earnings Wednesday. The electric car maker reported figures that fell below Wall Street estimates. Tesla also announced it would restructure in the first quarter to cut annual costs by $400 million. To talk about this past Wednesday, we were joined by ARK Invest's Tasha Keeney and Bloomberg's Dana Hull, who covers Tesla.
So this earnings report was not a huge surprise. Elon Musk had signaled to everybody when he announced layoffs earlier in January that they were expecting a smaller profit in the fourth quarter than in the third quarter, and that's what they delivered today. They missed on EPS, but still have cash, can pay off their debt, and shares have kind of bounced around a little bit after hours, but are fairly flat last I checked.
So, Tasha, I mean, the big question is sustainability. Tesla had, despite a lot of challenges, a record year last year. What are you expecting when it comes to production and deliveries and demand this year?
So for demand, I mean, we've really seen the Model 3 come through in really surprising ways. I mean, it's the top selling premium sedan in the U.S. For the second two quarters. Again, in the U.S., we saw demand come in really strong. They're just starting deliveries in China and Europe. So I think we could expect, similarly positive, a positive picture there. In terms of production, I think there's actually too much focus on production and delivery figures for a company that's really ramping like Tesla. At ARK Invest, we're long-term investors, so we're looking to the future. We're looking to Tesla as an autonomous mobility as a service company. So if they miss production figures by, a month or a few weeks, that doesn't bother us so much because we're looking to the long term. We think that the Tesla could launch an autonomous service, and that's the most important market opportunity ahead of it.
Well, and Elon Musk himself has focused a lot on production. I mean, he's the one who said that the Model 3 would take Tesla through production hell. That said, we know the company's not going to necessarily keep up the production levels of last year. They've laid off 7% of the workforce, trying to restructure. So, Dana, how will that sort of redistribute workflow?
Yeah, it's interesting. The shareholder letter said that they're now hoping to reach a sort of sustained production rate of 7,000 Model 3s a week by the end of 2019. And, remember, like in August of 2017, Musk said you should have no concerns that we're going to reach 10,000 a week by the end of this year. So they're definitely kind of walking back some of their original production targets. But at the same time, I think they're really trying to manage demand. I mean, this is a company that builds to order. They don't have a lot. They try not to carry a lot of inventory. And with the tax credit cutting down and these different trying to just manage, they don't want to build a lot of cars and have them sitting around. So I think it's actually smart what they're trying to do.
Tasha, Tesla's broken ground on that factory in Shanghai. How optimistic are you about Tesla's future in China in the midst of these trade tensions?
We've actually seen a lot of positive activity, particularly in the auto space in China. This past year, we saw the relaxation of the 50-50 joint venture rule, basically allowing Tesla to enter the market without a local partner. We think they still will have some local partners, perhaps for supply, of course. But it's that rule of relaxation actually seemed uniquely beneficial to Tesla. We've heard Musk say that he's had good talks with local officials there. He's complimented them on their science prowess, right, as he's trying to roll out autonomous driving. And for us, we think that's the largest market for autonomous driving. So it's really strategic for Tesla, and we're excited to see what goes on there.
We haven't gotten an update on Autopilot in a while, Dana. What are we hoping to hear on the call today, which starts now in about 15 minutes?
Yeah, there wasn't much on Autopilot in the shareholder letter. On the call, I would imagine that people would be asking about it. Like when is Tesla going to first demonstrate this autonomous cross-country drive? In previous calls, we've had the whole Autopilot team on the call. I'm not sure people are expecting that this time. But, there's a sense, I guess, that Tesla has fallen behind competitors like Waymo, Zoox, and Cruise when it comes to sort of getting to market with an offering that consumers will feel comfortable in.
And Tasha, clearly, Tasha, the Model 3 and Tesla is far ahead in terms of electric cars overall. But you do have competitors coming to market. Sales for those will likely be small this first year, but will grow next year. How much does Tesla have to worry about the competition, whether it's Audi, whether it's Porsche?
Sure. Well, first I'd say on an autopilot front, I actually think Tesla's Navigate on Autopilot feature shows that it actually is sort of competing with companies like Waymo. I mean, they're coming from a different approach. They're testing on suburban roads as opposed to Waymo is testing on suburban roads as opposed to Tesla, who started mostly on highways. But that feature in terms of getting on and off the highway is actually a problem that many autonomous teams have had trouble with. I think on the battery front, we've heard that Tesla's going to account for about 50% of global battery production by the end of this year. So when we think about competition, that competition gets to scale, and that takes years. Tesla already has that scale, and more importantly, they have a technology advantage. So we just heard the North American CEO of Toyota say that Tesla is affecting Prius sales, and they're creating a new category vehicle, a technology-driven car. So that comes in through over-the-air updates, things that competitors just don't have.
Now, Dana, it's obviously been a tough year for Tesla as well. Elon Musk was fined by the SEC. They've brought on independent directors. We don't know how independent they really are, but Larry Ellison has joined the board, and Elon Musk has been fairly quiet. Is there a sense that the governance and the leadership issues have stabilized?
I think that 2018 was such a dramatic year between, the autopilot fatality, the SEC investigation, the go private bid. I mean, Tesla was in the news nonstop, and I think everybody at the company and at the executive level is just like ready to sort of focus on execution and stay out of the limelight if that's possible. So, the shareholder letter today was remarkable to me in that it was a bit conservative just in terms of guidance. There weren't any pie in the sky predictions. We didn't hear anything like, oh, we're going to unveil the Model Y in March. I mean, it was very much sort of like a conservative letter, and it'll be interesting to see what the tenor of the call is today.
ARK Invest Tasha Keeney and our own Dana Hull. Well, Dropbox has acquired HelloSign for $230 million in cash. HelloSign is an e-signature software company that counts Instagram and Lyft among its customers. The deal is expected to close this quarter, and Dropbox says HelloSign will continue to operate independently. Coming up, hardware company Logitech is on track for growth in 2019 and crediting one booming industry. We'll talk with the CEO. This is Bloomberg. Logitech is crediting much of its recent success to the rise of esports. The company reported $864 million in sales in the last quarter, with a 23% jump in the gaming business. The company has attempted to diversify its offerings in recent years as PC sales declined, while mobile and cloud services gained popularity. CEO Bracken Darrell joined us Monday to discuss.
Well, I have 3 kids, and all 3 of them were gamers, and they were right in the strike zone. And before I joined the company, my kids said, "Dad, Logitech's a great company, but their products aren't as good as they used to be." And so when I joined, I immediately said, where's the gaming group? And it was 4 people. And so we changed that right away, and we have a great team.
How big is the gaming group now?
I wouldn't even hazard a guess. I mean, I wouldn't in public, but it would be well in the hundreds.
So you still make the keyboards and mice that you did in the early days, but now you're making more of this equipment for games.
Yeah,
right?
exactly.
Controllers, keyboards, headsets, speakers.
Right. And gaming is, I mean, in a way, the core business, which is actually quite healthy, it grew 13% this quarter. The core business of mice and keyboards and headsets is really the same thing you see in the gaming business. It's just that it's much higher spec. It's most increasingly wireless, super high quality sensors, and it's designed for gamers. So it's that business. Plus, we also make things for console gaming, which are headsets mostly today. We're getting into the controller business. And then we're in simulation, where you can feel like you're driving a real race car in a simulation game, or if you're really adventurous, you can drive a farm sim, a simulator for farming.
Then does the health of the company depend on the health of the gaming industry, and is that a concern given China's recent crackdown on gaming in particular and just the health of the global economy right now.
Well, we've gone from when I first joined, I think we had 4 business groups, now we have about 13. So we're increasing our portfolio all the time. We're a lot more than just gaming. We are in gaming, and gaming's on a secular growth curve that will go on forever. It'll be the biggest spectator sport, I believe, within the next 20 years. But even besides gaming, we're also very big in video collaboration now, video conferencing. We make video conferencing equipment for rooms of all sizes now. That's our 3rd biggest business. And of course, our PC peripherals business is very strong. And then we're entering new things all the time.
What's the outlook for esports?
Esports is fantastic. What's happening in esports is for most people under the age of, under the age of say 25, they realize this, but almost everybody's either playing or watching or both. If you're over the age of 35 or 40, you're like, what is this esports thing? Is this a craze? It's absolutely not a craze. These people they're playing more and more games, and they're playing them longer, and they're going to keep growing, and they're going to grow up, and their kids are going to play. So it's going to be big.
How is your strategy being impacted by the trade war and the concerns about the Chinese economy?
This doesn't even touch our strategy. It touches the tactics and the operations on the way we go to market, or the way we bring things to market. So we do a lot of manufacturing. We have our own factory in China, but we also manufacture in other people's factories in China. And in this case, what we will do is we're used to moving things in and out of our own factory. So we're just moving things into other factories, some of them outside of China. And we're, where we can, just lowering our costs overall. And then if we need to raise prices, if we have to, we will.
So what's the volume of manufacturing that you're moving outside of China?
It's relatively minimal because the U.S. business is only about, our total AMR business is about 35% of the total business now. U.S. within that would be about 28, and it's about half of that, so it's small.
If you need to raise prices, isn't that a concern for the business?
Yeah, although we're generally the biggest player in most of our categories, so that gives us some pricing power. And everybody we compete with is in the same boat, so they're going to have to raise prices too, probably. Who knows?
Do the trade tensions have you thinking any differently about acquisitions and M&A?
I was in a dinner the other night with some other CEOs, and that question came up. And no, it doesn't for us at all. It's I think it's probably dimmed the overall market in general and made people a little more conservative, which makes things even more attractive from a pricing standpoint. So no, it hasn't made us think any different about it. We're still thinking about it and looking all the time.
Now, some of the big consumer tech companies have been increasingly getting into consumer-facing accessories like Apple,
absolutely,
Facebook, Google, Amazon.
Yeah.
Is that a threat to your business?
I think our general strategy and choice set is we try to go into things that are really not important to them strategically. If they're in them to finish off an experience that they'd like us to finish off too and do a good job in. So no, it's not a threat, but it does shape the directions we go in.
Logitech CEO Bracken Darrell there. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. You can tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. And we're live streaming on Twitter. Check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Bill and I always look for any philanthropy we do to fill some of those gaps.
I'm Emily Chang, and this is the Best of Bloomberg Technology, where we bring you all our top interviews from this week in tech.
I think Facebook's how we won in a lot of ways. Do you ever take any of the tips and give them to your LA Clippers coach?
No! I will stand up for Canadian interests. I will only sign a deal that is good for Canada.
Coming up on Bloomberg Best, the stories that shape the week in business around the world.
Welcome to Bloomberg Big Decision. Really good to have you here.
Thank you so much for having me today. We know this business inside and out.
You've really built a conglomerate.
We saw amazing opportunities in the Middle East.
They had the dream, you had to bring it to reality.
Between the three of us, we can really do anything.
I feel like this is where we should go.